All right, it's time for the weekend market wrap here. We're talking to Jerry Gulke at the Gulke Group at the Chicago Board of Trade. And Jerry, a lot of action this week in the corn market. Let's start there. And you've been watching charts pretty closely. And what's some of the things the charts are telling you here?
Well, this week there was some people that were trying to buy corn and saying, what we don't want to do is take out that low we made in April, and that was at 354. And lo and behold, this week, July corn went down to 353.5 and turned around and rallied back up to close 15 cents off of those lows, and a lot of that, of course, the last couple of days. That'll be pretty significant, and I think what happened was the market went down below there and said, are there any sellers? And there weren't any. And I think they're below that level, and anybody that was long got stopped out, but there weren't many that wanted to go short. That was the same area that made the bottom, that China helped make the bottom a few weeks ago and saying we're going to buy corn, and they suggested $1.5 million for this year and $3.5 million for next year, and they weren't lying. They've been buying corn consistently and continue to do so this week.
Okay, and speaking of the China, we did see some more activity there this week, and I think expectations are still there that we'll see some activity in through the summer. But you point that out on your monthly chart here.
Right. Actually, back in September of last year, corn got to 301, and I wrote a top producer article a couple months earlier saying what the technical chart would be, and I think we used 299.5 or something, and the market turned around there, I guess, because it was looking and saying, there's a lot you can do with $3 corn. We'll burn it if you don't feed it, and all these ethanol plants will come back at $3. But it actually went long on a monthly basis and continues that way on this quick study type of thing. There's a slow momentum index that I use that takes quite a bit of time for it to turn, but when it does, it's awful hard for it to go negative again, and we're kind of on the verge of doing that. And if we would close, say, above 390 in July, or if we go sideways for a while, pretty soon that's September, and then it's December, and it becomes a self-fulfilling prophecy. But I was asking myself, what in the world would make corn continue in an upward bias, and now we're finding out it's China again, like it is in soybeans. And I guess the thing to watch is the Chinese crop. It's behind. It's kind of a lot like ours was last year at this time, only we have the genetics, and they may or may not be able to get the crop in on time, but they've been behind because of weather, and they've got some drought that's in the non-ag areas that a lot of people are saying, well, it's not a big deal. They don't grow corn there anyway. Well, if it moves like sometimes does the United States, then it becomes a concern. If they would grow a subpar crop like we think they did last year, of 10 million less than they're thinking, than 10 million metric tons, that's 390 million bushels. It's got to come from somewhere. And we as producers don't care where they buy it from. If they buy it from Argentina and suck up all their extra stocks, then the rest of the world's got to come to us. So they're going to be a force, I think, to be reckoned with, if nothing else from an unknown standpoint. That I remember the Russian things in the 70s, and you didn't know what was going to happen on a Friday because over the weekend Russia would come in and buy grain and the market would be up, and you missed an opportunity. So it's going to keep these traders on edge.
Is China overriding the weather issues right now?
Yeah, I think so. I look at it and I read a lot of the stuff that comes out by other analysts and good stuff, and it tells you the basic fundamentals. So when I look at this crop coming in and saying, boy, it could be 168 bushels an acre, or it could be 164, it doesn't make any difference. We're going to have plenty for everybody, and I've even written that in my morning comments and said, okay, so tell me something I don't already know. I know how bad it could get supply-wise. I know how good the weather could be, and I know how good a crop we could get if our crop was anything, our weather was anything near like it was last year, a cool summer. And even then, under normal circumstances, I would say pre-China and pre-ethanol, go back 3 or 4 years, and we'd probably be going down 50 or 60 cents a bushel in this corn crop. And so I'm thinking that this new paradigm shift tells us that, yeah, it may happen, but I want to see it first. Get that crop finished going into August or September for corn, and certainly September for beans, and no threat of early frost even in North Dakota to take away any acres. And then we'll look at how far down we got to go before China comes back in this fall. And what was interesting today is that they were buying corn for 2010-11 marketing year. That's next year's crop. And so they're looking not only to buy for this year, but they're buying in the next year's calendar year like they said they were going to. And they're also buying beans for next year. So some in the business think we're still underestimating the soybean demand for China, that it could be 50 million metric tons. When it wasn't that long ago, we were arguing whether it was 42 or 44 or 46. And so if they're doing that in meal and protein, they may very well be all of us may be underestimating just what China may take in corn going forward.
You talk about the demand for soybeans from China, but
right.
The charts don't show that. But before we switch to soybeans, how about wheat? Is that being supported by the China news, or what's holding up wheat?
Well, I think it's, there is a point where prices get so cheap that you got to say to yourself, when is it a good opportunity to just own it? And do you think Jerry and his friends are going to grow some more of that $4.50 wheat if that's all it is next year, and corn is higher and beans are $9? You'll get soft red winter wheat planted, but I think corn competes pretty well, and beans do in Kansas and other areas for South Dakota and North Dakota for wheat acres. The other thing is this effort to bring this convergence thing into play, and if you own wheat and you got the facilities to store it, you can make $1.50 to $2.50 a bushel storing this stuff and just selling the carry, and eventually somebody will have to pay. Either you'll make money on the futures coming down or the cash going up, and the first bad crop we have in the United States, the CME will come in and say, see, our convergence effort to bring cash to futures work.
Okay, we don't have a lot of time here left, but we're in about the middle of a 2-week downturn on soybeans, it looks like. What's it going to take to bring those back?
Probably more of the, I guess it's La Nina coming back that would make August hot and dry. We've tested some pretty important levels. We've been at this $9 level, 907, 906 in November for a number of times since back in October, and we just have not been able to penetrate it. It doesn't look good. I would say of all the ones in the marketplace, we got a big crop. You can't kill the crop in Brazil anymore. That's going to weigh on us. If we get a good crop in soybeans, I think the market will try to discount a 300 to 350 million bushel carryover and just see how cheap we can get beans into next fall. But here again, we've got China that if they're going to buy 2 or 3 more million metric tons, then that's another 100 million bushels that comes off the marketplace, and they may very well continue to buy from us. They continue to price soybeans out of the Pacific Northwest, which blows a lot of people's minds because they're hard to get. And why are they buying beans from us when they can buy them cheaper from Argentina and Brazil? Whoever thought that we'd be competitive with someone? And I think it's from China's standpoint, I don't know if they want to put all their eggs in one basket, and maybe it's better to price a few million metric tons or a couple from us at a higher price. That doesn't mean they bought them all from us, but maybe that is if you carry a big stick like they do, you make Argentina, Brazil think twice about jacking up the price and the basis because I'll just buy them from the United States.
But looking at the dollar chart you have here, and then taking into account the Brazil currency, the real is definitely getting weaker while the dollar is getting stronger. Could that hurt us?
It could if we do that in the long run, but it's a long time till fall, and we've got a lot of things to unravel worldwide in the economy that would affect that dollar. And again, it's the signal that we send the Brazilians, especially, not necessarily Argentina, but Brazilians, as to can you afford to bring in that new extra acre? And again, it's not, the land that's already in production is going to be in production regardless, probably. But how much are you willing to pay on what's it going to cost to bring that incremental acre into process? And that's the one. If you need another 5 million acres, you're not going to get it at $8 a bushel in beans unless the reality just totally disintegrates. So it's that extra incremental dollar or bushel, and what does it cost? And it's about, I think, from $9 to $10 a bushel. I think you get their attention. But and again, it's that signal that we're going to send next fall. If we, because of the U.S. crop, we get prices down in that low $8 range, what we're telling Brazil is that please don't plant anymore. We got plenty of stocks. We got a couple 100 million bushels in the United States. We don't need. Don't plant another 1 million or 2 million acres. We don't need them right now.
Okay.
So that sends them a signal the same way that the market sends us a signal in April and May what to plant.
Okay, that's Jerry Gulke. Jerry, if somebody's interested, these charts certainly paint a picture. If they want to get them, what do they need to do?
They just get on our website, www.gulkegroup.com, and there's a tab on there that says additional information. Get on there and say the charts you mentioned on Top Producer Radio, and we'll email them out to you. If you don't, of course, have email, then just send us a letter or give us a call. Get on the website and from somebody and get it. But otherwise, you could call 312-896-2090, and we'll be glad to send you one by mail.
All right. That's Jerry Gulke.
You get more of them. So.
All right. That's Jerry Gulke with the Gulke Group. Thanks, Jerry.
Thank you.
All right.